Hi, my name is Christina Roberts, and today I would like to talk about market recognition using patterns through recognition analysis. The purpose of this video is to perform patterns through recognition analysis on investment data. I have decided to look at the stock market data for Microsoft Corporation. The website I used to collect my data was from Nasdaq.com. To be honest, I chose this site because it was easy to get where I needed to go, and they have an option for you to export your data into an Excel spreadsheet, which made working with the data so much easier since I didn't have to farm for it myself. So thank you and shout out to Nasdaq.com. The objectives for this video are to use advanced data mining techniques to select relevant features, demonstrate statistical concepts and software tools used to identify patterns, determine correlating factors and differentiate between spatial, temporal, and coincidental associations, value data monetarily, and determine if the value outweighs the cost, make effective decisions based on observed patterns, and create forecasts based on trend analysis. In this video, I will be discussing a correlation analysis to determine the possible connections that will allow me to predict future trends between variables, use information collected to determine if there is evidence of whale tracks, and where do I see the support resistance levels, Bollinger Bands and how to use them, and based on the Bollinger Bands, would I recommend buying, selling, or holding on the Microsoft stock, and finally, where do I see the Microsoft stock price going in the near future. Using correlation analysis, I am going to study the strength of the relationship between the opening and closing cost and the possible connection to the volume. Pearson's product moment coefficient is the measurement of correlation and ranges, depending on the correlation, between +1 and -1. +1 indicates the strong positive correlation possible, and -1 indicates the strongest negative correlation possible. Therefore, the closer the coefficient to either of these numbers, the stronger the correlation of the data it represents. On this scale, 0 indicates no correlation. Hence, values closer to 0 highlight weaker or poorer correlation to those closer to +1 and -1. If there is correlation between two numerical sets of data, positive or negative, the coefficient worked out can allow me to predict future trends between the two variables. However, I must remember that I cannot be 100% sure that my prediction will be correct because correlation does not determine cause or effect. With the correlation analysis, the opening cost is correlated with lower overall volume score of -0.091, which is considered a small effect. In addition, the closing cost is correlated with lower overall volume score of -0.13, which is also considered a small effect. Overall, I concluded that based on the correlation analysis, both the opening and closing cost is correlated with lower overall volume score, which is considered a small effect. Whale tracks are investment houses buying large quantities of stock, causing the price of the stock to move up. So when the whale splashes down, it creates a big wave. Everyone else, the little people or the small businesses, in this case the little fishies, they can either surf the wave or be crushed by it. To be able to surf on the wave, you have to be able to see where the whales are moving and how they're moving. For instance, in this graph, which is the last 11 years on the Microsoft stock price at opening and closing cost, I can see that there are definitely some whale tracks in motion between 35 and 40 on the first half of this chart. If I zoom in on the first 7 years, the bouncing between 35 and 40 is when the whales buy the stock when it's low at 35 and then turn around and sell it at 45. This is because the whales only want to get a very specific profit and then get out. Support and resistance are the areas where the market changes direction or has stalled repeatedly. A bullish move which turns bearish has met resistance, and the opposite, a bearish move turns bullish, has met support. Support and resistance areas can last for minutes, hours, days, weeks, months, or even years. Also, it is important to note that support and resistance works on every time frame. The resistance area can be found when the bulls are pushing up and the market turns. As the bears cause the market to fall or they lose control to the bulls, the market has met support. This is the most common way for the market to move. However, it rarely looks this neat or can be as easy to identify. When the market does break resistance, it often becomes support. This market is now making higher highs and higher lows. A market moving like this is said to be in an upward trend. However, when the market breaks support, it often becomes resistance. This market is now making lower highs and lower lows. A market moving like this is said to be in a downward trend. It's important to realize that markets have very long memories. The support and resistance areas are broken regularly. When broken by a bullish move, resistance often becomes support for the market in the future. This can be the same for when a support can become a resistance for the market. Here is a snapshot of Microsoft stock from September 2018 to November 2018, roughly 2 months. You can see that there are many support and resistance levels in just the 2-month period. Now let's look at a longer period of time. This is a snapshot of the Microsoft stock from November 2007 to September 2018, roughly 11 years. You can see that there are many support and resistance levels and evidence of their long memory. Here we see the Bollinger Bands for the Microsoft stock from January 2018 to November 2018, the blue line indicating the mean and the white line the close, while the red line indicates the lower band and the green line indicates the upper band. What I'm looking for is where the close line is. If it's close to the upper band, then it's a good time to sell because once it gets to the upper band, it tends to come down shortly after. If it's close to the lower band, then it's a good time to buy because it will be going back up towards the upper band. Based on the Bollinger Band, my recommendation would be to hold. If I zoom in to take a closer look at how the Microsoft stock is doing closer to today, I can see that the closing line is coming back down from the upper band and is on its way down to the lower band. By holding, the market will either head back towards the upper band before hitting the lower band, or it will eventually hit the lower band and then head back up towards the upper band. So by holding until one of these two events occur, you are more likely to turn a profit than you would be to lose one. Microsoft has been around for a while and is one of the top companies on the market. As you can see from this chart, since 2007, Microsoft has continued to climb the market, and I don't see them falling anytime soon. Yes, there have been some up and downs throughout the years, but overall the big picture displays a continuous upward trend. For more information, please see the references on this and the following slide. Thank you for watching and have a great day.